Hello traders, it's Samurai Trader here. Welcome to this session. In this session we're going to be looking at day trading the 30-year US Treasury bonds using some of the strategies from the Day Traders Fast Track program. This is a new market to me personally. That is, I don't trade the Treasury bonds. However, we have, I think last count, 11 or 12 of our members are very active in this market. So they've just asked me to give a quick overview on a couple of setups just as a comparison of how I might consider trading this market. Now, what is interesting is doing my research in looking at the 10-year bonds today. So we're, by the way, the date is, it's Monday the 12th of the 12th, and it's 5:27 p.m. in my part of the world. So we're during the Globex session. There's been a massive 142,000 contracts traded on the 10-year bonds, and on the 30 years there's been close to 20,000 traded. Now if we compare that to the ES, the E-mini contract, there's only been 82,000 contracts traded. So there's very large volume, of course, trading in these markets on a daily basis. So very interesting, let me put it that way. So let me just put up the risk disclaimer as we move right along here. Understanding the risk, what I'm not giving you here is investment advice. Of course, it's for educational purposes, and if you haven't read the risk disclaimer for some time, if you're an existing member, please do. If you're a new member, please pause the video and make sure you read the risk disclaimer. That would be great. Now also, if you're new to my channel, please subscribe. Even better still, go to my website and request my ebook. I have a training manual available free of charge now. I've got an ebook, The Truth About Day Trading, and even more importantly, join us as a member. We've got hundreds of members globally that are members of the Day Traders Fast Track program for $197, and I promise this ad will be really quick. You get my 12 top day trading and swing trading strategies. There is no upsell, there's no coaching programs to go and buy, and I include my indicators within that for the 4 major platforms. So that's the end of the advertisement. So let's get to the chart and get into this. So what we're looking at here on the left hand side is the 30-year US bonds, Treasury bonds. Now what I've done is just looked at here and just put up a 144 tick. So I like the 144 tick as an example on the NQ. Most of my traders know I usually trade the NQ with a 133, but 144, very little difference. But for our Fibonacci fans, there's the 144. And I thought just on the right hand side, rather than have an anchor chart, I just put up the 55 tick for the Globex session. Now each one of these ticks here on this market is 31.25, so it's quite a size. It's in tick size. So if we look at this, is 1 2 3 4 5 6 7 tick movement in that move. Now if we were using, for an example here, the T2 setup, we're waiting for our close below the 8. 1 2 3, there's a good 3 to 4 ticks, or a good up to $120 in that move. But what I wanted to point out, I've marked up the chart in a little more detail further along, but what I did want to show is just, as I was just setting this up, here's our classic T7. We've got classic divergence here, a classic T7, and at $31, nearly, yeah, $31 a tick, there's some really nice moves we've got here. Let me just scroll along a little bit here. At classic 89B, 200B, so there's some there's a classic 34B, there's a 200B there. So the behavior of this market, if you're taking your highs in a direction, we don't have our anchor chart here, there's some really good moves in this market, but let's go to a whole day that I've marked up here. So looking at this here, we can see very much we're in a downtrend. We've got a T1 set up. You've got slight divergence there, lower low, slight divergence here to go long. Then you've got your T7, you've got a 34B, you've got here you've got a T10. So there you've got a nice 200B, you've got a T9. Of course, in between you've got here, you've got a number of T25s. You've got a 34B. Now personally, I would have been stopped on this trade because I like to tuck my stop 2 ticks above the high, and we can see here it actually ticked up 2 ticks, but then I had my secondary entry. There's a T9. Now, by the way, this is 5 a.m. in the morning, so we're in the Globex session still. You've got here a T9. You've got then a change in market direction. We've got divergence here. You've got a nice pivot bounce. So 7:30 in the morning. Okay, you've got a T9. You've got a nice T3 set up here. You've got an extreme. You've got a nice T7 with divergence. Now, is 144, you've got a T7 with the trend, which we really love these. You've got there your classic 34B, 34B. So for people that are sorry, the general public that are not members, these are some of the codes of the different setups that we have. But once again, the evaluation here is just about how I feel this is as a market. Well, we can see here that we've got some great trends, and that's really the most important thing. I had a new member ask me the other day about trading a range. I'm not a great range trader. I'm a momentum trader. I like trends, and I have a rule that if I have two stop outs, I'll stop and wait for a new trend, because what I found from history is that if I enter the market and I'm stopped out twice, it's usually because I've entered a chop zone, and I'm just not into trading tight ranges. I'm just not all that great at it. I'm a trend trader. I'm a momentum trader. I'm a scalper. And looking at this, and by the way, we're looking at Friday's price action. So what was Friday's date? The 9th, I think it was. So this is Friday the 9th. So come Friday afternoon, I'd advise most traders you consider packing up early and having an early day, because we tend to find with all markets we tend to get very choppy. But if we look at this here, you've got a nice T9 again. You've got T1s. I haven't even been calling all of the T2s that you've got with the trend. So you've got a ton of trades in this market, and so it's a great market. So like all markets, you want to get to know the personality of the market. Now, what it also means is that at $31 per tick, if you have a T1 entry, usually means you're going to have a stop of at least 4 to 5 ticks, which means you're going to have a stop there of probably upwards of $150. So that means if you're staying within your 2% risk parameter, you need to have somewhere around $7,500 per contract to stay within the 2% maximum risk rule. So that is a consideration that I would want to be very cautious of. For an example here, this T9 signal we did not get until we had that tick there. So that's a 1, 2, 3, 4, that's a 6 tick stop. So we're looking at about $190 just to have our stop 2 ticks below that swing low. That's about $180, $190 stop, which yes, it was a really nice move. And 1, 2, 3, 4, and let's just be conservative, say we picked up 5 ticks out of that. So it's, yep, you're getting the moves, but it's a stop that I would be a little concerned about. Whereas say if you're looking at the ES, usually my stops a maximum of 6 ticks, which is $75. On the NQ, 14 ticks, which is around the $70 plus your commissions. On CL, maximum of 8 to 10 ticks, which is $80 to $100. So that is one consideration. But on the other hand, some of the bond traders we've got have been trading the bonds for a long time, and they know the personality. So you may choose, of course, just to have your stop 1 tick above. If you're taking a T25 or a 2 to 5 candle retracement trade, well, there of course you may only have a 3, like on this particular one here. You may decide, because of your targets, you may decide just to have your stop 1 tick above that little swing high, which means of course you only have a 3 tick stop on this particular trade. So there you've got a 1, 2, let's just say a 3 tick target. Now of course traditionally with your swing traders you want to be going for a 2 to 1 risk reward, but if you're scalping like we're talking about here, 1 to 1 is probably more the norm, and maybe your second contract you're going to let trail. Now what I've done over here is just put up a 55 tick, and let me just disengage something here for you. Just remove this. So what I've done is put up the 55 tick because the market is much slower. Now even though we've had 20,000 contracts trade, This is from the open of a session, which is 8 a.m. Sydney time, Australian time, and we can see here that I would probably strongly consider the 144 tick during the main New York hours, and looking at the 55 tick for the after hours market. And you can see here you had a nice trade there. If you tuck 2 ticks above there, you might find 1 tick you would have been stopped. There's your re-entry. You've got a trade here. You've got this classic 200 bounce. And as I say, you want to get to know the personality of this market. Look at this here. You've got a nice 200B. You've got a 34B. I mean, you've got multiple other trading opportunities. Now, for scalping 1 or 2 ticks, as some of these traders are doing, and I can see why you like this market, but you just want to keep your stops in fairly tight. Of course, right there you've got, whoops, just 1 candle too early there. You've got a nice T2 there. You've got a nice T2 here. You've got a T2 here. You had a T2 on this candle right there. Now, for those that are new to us, a T2 is a very mechanical approach to trading, and it's basically what I call 95% rules based. The discretion is, do I have a trend, and to make sure we're not around any red flag news announcements. And of course, I would be recommending traders you're looking at a time frame 3 times higher as far as confirming the trend. So in summary, I can see there's some huge volume. Looking at this during the New York hours on both the 10-year notes and the 30-year notes. If you're used to trading, as I say with all traders, with all traders in all markets, if you're really good at one market and you become a member of a day traders fast track program, what you do, you look at what we do and you say, how can I apply these strategies to what I already know? How can I make or do better and apply these and make what I currently do better? And because I can see some great trades here. Now you may find, and just in closing, that volume charts work really well. You may prefer range, or of course for many of you, your time-based charts. And for those members, you know that I love tick and volume. Generally speaking, I prefer range on Forex, by the way. So hopefully this is just giving you some ideas. Please drop me an email if you've got any other questions, but otherwise, a formation of this market, really, if I didn't tell you it was 30-year bonds, you could have thought it was really virtually any market. And that's the beauty of trading, of course, is that day trading strategies should basically work on all markets and time frames, any stable, good long-term methodologies. So traders and members that specifically asked me just to give this quick recap, I hope, and look at this nice T3 there. Okay, you can see it there, classic. So hopefully this was beneficial to you. Thank you, traders.